Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe and positive out there. Today is yet another dividend stock portfolio update. I'm giving weekly updates because I think it's incredibly bullish, making that passive income through dividend paying stocks. I love it. I'm addicted to it. Seeing that income grow is absolutely incredible. Anyway, let's get straight into it. Make sure you stick around to the end of the video. Massive shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. If you are new to the channel, make sure you smash the subscribe button down there and turn on that little bell notification as well, because as you can see right here, I love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. We're just getting started. Also, if you can give this video a thumbs up, watch it straight through, it would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you find, ladies and gentlemen, do that. All right, so give it a good old thumbs up. Doesn't cost you anything. It's absolutely free. Thank you very much. You guys rock. Also, little disclaimer, I am not a financial advisor. Please do your own research and due diligence. This video is for educational and entertainment purposes only. And my number one golden rule with any investment is I only invest what I can afford to lose. And yes, we don't like to lose. You can lose money like that in the blink of an eye. All right, so please be careful out there. Do your own research and due diligence. This video is for educational and entertainment purposes only. All right, ladies and gentlemen, the formalities are out of the way. Now, I am going to show you this right now because obviously you've got here the dividend stocks playlist right here is on my channel. Go and have a look at it, guys. You can see my entire journey with dividend stock investing. All right, so I just want to show you guys how much of a journey this has been. Look at all my videos. All right, this is all my videos right here, and this is how I got started. Straight up, I got started with dividend investing on YouTube. All right, so go and have a look at the stuff I was doing right there, and you can see how much my portfolio has grown. Look at this, like $5,000. That's when I hit it in USD. That was a big moment right there. And obviously you can see the full-blown growth. This is why I love doing this, because you just see the growth. You can see I just hit $17,000 right there. Moving down, guys, you can see some other portfolio, $19,000, $20,000 right there. You know, going to $75 a month, $27,000 right there. $38,000, $40,000. Keep moving down, guys. $49,000, $51,000 right there, guys. Moving down, obviously, you've got the latest one from last week, which is $64,000. So, guys, it's madness. I absolutely love it. It's addictive right here. So I'm going to get into everything. Now, this is my brokerage. I use the broker Stake here in Australia. They've been an incredible platform. I've been with them for a long time. There is a referral link below to Stake. Please feel free to use that. You will get a free stock in Dropbox, GoPro, or Nike. One of my followers actually said that they received a stock in Nike, which is incredibly bullish as well. I've got a couple in there, I believe, from referrals. So if you've received one, let me know in the comments below. They are quite rare, and it's a dividend-paying stock, mind you, as well. So anyway, let's get into it, guys. Again, my portfolio is sitting at $45,233.68 USD. Again, we lose about 20 to 25% of our money when buying US dollars through foreign exchange fees. It's really annoying. However, seeing this grow with dividend income is absolutely incredible. Now, because the markets are Monday to Friday, obviously on Friday, I'm down 163 US dollars. I have made a 15% return, 5,953 US dollars. That is because I bought all throughout the pandemic when the markets were just completely shattered. Oil prices actually went into the negative, and I just continued to dollar cost average. Now, obviously, I've started heavily investing in income generating stocks, aka Qyld, which is a covered call ETF which pays monthly, and I'm incredibly bullish on this, guys. Now, currently sitting at $16 a share, 12.58% dividend yield, which is very high, guys, but again, it makes up for it in dividends every single month. All right, I just received a dividend from them of around 18 cents a share because the end of the month. Obviously, we're in September now. Last month ended, I got paid a dividend for 18 cents a share. Now, I currently hold 164 shares of Qyld with an equity position of $2,771. This particular, ETF right here is not for growth investment, okay? This is purely just for income. That's what I want, income. I want money. straight up every single month. That's why I put my money out. However, I am diversified in ETFs that obviously do have that growth. For example, the stock price goes up in value. For example, Sphd is an ETF right here, an index fund of the S&P 500. This does pay monthly as well. However, that dividend yield is sitting at 3.48%. Different story compared to Qyld. Now, this is just a traditional ETF. Basically, what it does is it gets the top 50 stocks in the S&P 500, the top dividend-paying stocks in the S&P 500 right here. And again, it pays out dividends every single month. Now, the only difference between Qyld and this, of course, is the growth in the stock price. If I go to the 3-year chart right here, you can see that it has gone up to $43 a share. It's up 5.30% in the obviously in the last 3 years. In the last month, everything is down because there's a lot of economic stuff going on in the world at the moment. However, another index fund, which again has the growth potential as well, is Vanguard's VYM. I love index funds because it saves the hassle of finding individual stocks. Obviously, VYM right here, guys. Another Vanguard ETF, S&P 500, high dividend yield at 3%. Again, it's just for that growth. If I go to the 3-year chart, you can see here it's gone up 17%. Whereas Qyld is just about income, generating income, passive income. That's my goal. Now, obviously, my biggest dividend incomes are coming from Exxon Mobil. I talk about it all the time because I've just seen some pretty incredible stuff right here. $95 a share. This is actually my biggest position in terms of what I've gained from investing in the last 3 years, guys. It's up 34%. If I go to the last year, it is still up 74%, which is madness. You can see here the dividend yield is sitting at 3.75%. I currently hold $10,000 worth of Exxon Mobil, 105 shares, guys. This pays out some really nice dividends. I have made $4,788, 90% on my money because I bought all throughout the pandemic. And the reason being is because everything else recovered and everything went back up in price. And this is my point. You need to be long-term with any investment because everything always goes up in value. Now, the other one right here, guys, is a closed-end fund, which is extremely high dividend yields at 21.67%. This is Cornerstone Strategic Value Fund right here. Closed-end ETF, $9.99 a share. I currently hold $1,700 in that. 170 shares. Guys, this is an insane monthly dividend-paying fund right here. Let me just go down here. Cornerstone Strategic Value Fund. The fund is a closed-end diversified management investing company. The fund's investment objective is to seek long-term capital appreciation through investment primarily equity securities of the US and non-US United States companies. So again, it is very, very high risk, and apparently these guys actually do adjustments with their dividend yield every once a year as well. So it has been paying some pretty nice dividends. Now, I just want to show you as well, if I go buying power on the app and I change this, it has been playing up recently, and I believe that they're due to an upgrade. So I'm just going to go here to dividends. Let me see if the app actually works. All right, so you can see here, guys, these are all the dividends I get paid out. Virtually every day I'm receiving money. All right, this is what I want to show you guys. I received $4 from Intel, 72 cents from Ford, UPS paid me 20 cents, VLO paid me 12 cents, WFC paid me 6 cents as well. You've got XYLD, another crazy fund, guys, an ETF, covered call ETF as well. That paid me $9. Moving down to some big ones here, guys. Qyld paid me $21 as well, and RYLD, both of these are all Global X, $10 USD, so I reinvested that money. Starbucks paid me 57 cents. SPHD paid me $17. Again, RY paid me 14 cents. Let's keep going down here, guys. This is all dividends right now, and literally it's every day. Every single day I'm receiving passive income. Look at this big one from AT&T of $24. And this is the point. All right, I want to get these to a point where it's providing me, enough income that, it supports your life. And that's the goal right there. And it will, but it's long term. All right, so that's pretty much every dividend I've been paid out right there. I'm not going to go through everything because it will take me ages. Now, let's go to my dividend tracking app. All right, so $3,905.84 a year in passive income. That is incredible. And that's in Australian dollars, by the way. I'm receiving $325 a month, $10.70 a day, and my average yield is about 6.63%. I'm due to receive dividends from Johnson & Johnson of 51 cents and Pfizer, believe it or not, of 32 cents. That is what it is. Again, it's passive income. Now, my biggest dividend payers right here, guys, you can see that Qyld is paying me $639 a year. Exxon Mobil pays me $545 a year. CLM pays me $526 a year. Sphd pays me $295 a year. Enterprise Products Partners is a midstream gas and oil transport company here, guys. Massive company. $238 obviously a year. Ryld is a covered call ETF on the Russell 2000, pays me $213. Covered call ETF on the S&P 500. Xyld pays me $162. Realty pays me $157. AT&T $142. Credit Suisse X-Links crude oil shares covered call ETF is ETN right here is madness. Pays me $123 a year. All of these guys, I've got JPI, I've got Prospect Capital, Vanguard right here, RA Brookfield at Real Asset Income pays me $66, and it continues on and on and on and on. So, obviously, I'm investing in the higher dividend yields right now because I need to generate more income. Now, I've got a goal of $100,000 a year. I've reached 4% of that goal. 45% of my dividends comes from miscellaneous companies, aka Qyld, Ryld, etc. I'm due to receive this month $198 in dividends. That is beautiful right there. Now, sorry guys, I was just in that before. This is my portfolio, $63,000. The market is down, so the stock price value goes down. However, the dividends do not. Facts, all right? Just keep that one in. They do, can be cut from a company if they want to obviously reinvest that money back into the company. However, most of these companies are massive blue chip companies that will not cut their dividends because they need those investors. Now, let's go down to my favorite part of this video right here, and this is the growth chart and compounding interest, the power of this. If I go to the 10-year chart, now this is based on if I don't put any more of my money and all I do is simply reinvest the dividends, this is what happens, all right? So in 10 years, the portfolio is going to be worth $180,000. It will generate me $23,000 a year. Now, let's just work it out. I've got my calculator. 23,000 divided by 52 weeks. That's $442 a week. Passive income in 10 years. Now, where it gets absolutely insane, and I mean insane, is this. Go to the 20-year chart. This is the power of compounding. My portfolio, just simply reinvesting dividends back into the companies that I've invested in. The portfolio is going to be worth $2.5 million, and it will generate me $795,000 a year. This is the power of compounding, and the reason why the earlier you're in the market, the better. All right. Now, I don't know about you, but $795,000, obviously this is before tax. All right. So we do get taxed. So it's not all fun and games. All right. So divided by 52 weeks in the year, this is going to provide me $15,288 a week. All right. A week. Now, if I'm going to multiply that by 4, that's $61,000 a month in complete and beautiful passive income. $61,000 a month. Now, if you're watching the video to this long, amazing. This is the power of investments, and most, major investors like Warren Buffett did this, all right? They've seen most of their wealth in their late, 50s and 60s, all right? This is what happens. Anyway, this is the reason why I'm so bullish on it, and I want to get this earlier. So I need to invest more money. So I want to get this around the 10-year chart, right? That's where I want to get it to. So I want to get about 700,000 in the 10-year chart. That will happen. Just need to stay focused on it. Anyway, that's pretty much it for today's video, guys. I wanted to give you an update. Again, I've been buying heavily into CLM, Qyld, Ryld, Xyld, dividend-paying ETFs, SPHD, VYM. I've got the growth with VOO, VOO, which is a Vanguard total S&P 500 ETF. You got VTI, which is the entire US stock market as well. Absolutely everything you can buy. That, of course, not financial advice. There's a lot of options out there, but I'm choosing to go the income route because that's what I want. I want income from my investments. Anyway, thank you very much for sticking around this long in the video. Make sure you leave a comment below. We'll talk to everyone. Stay safe. Have a good day. We'll speak to you tomorrow. Peace out. Bye.